Non-profit organizations, known as a non-business entity, often referred to as NGOs, it is dedicated to provide facilities and services for their members instead of making profit, defined in simple terms as organizations that work for any form of charitable purpose. It doesn't operate with the purpose of monetary gain. NPO use its surplus of revenue to further achieve its ultimate objective, such as promoting education, religions, and art, rather than distributing its income to the shareholders or members. It doesn't pay income tax on the money received for the organization because its income is used to sustain its activities and serve for the public good. Differences between profit and non-profit organizations. The purpose of profit organization is developing effective products and services that are valuable to consumers, while NPO is promoting a social cause from a particular standpoint, especially assisting with basic human and environmental needs such as food, water, and education. Funding for profit organizations is through revenue generated from sale of goods and services, bank loans and investments of investors. For NPO, it's through private donations, corporate sponsorship, government grants, and crowdfunding. Taxation for profit organizations, they must pay taxes as the law requires. For NPO, it qualifies for tax-free fundraising because its income supports and sustains service for public good. Reporting for profit organizations reports its performance to its shareholders and investors, while NPO reports its achievement and activities to a board of directors or other governing authority. Financial statement. Statement of profit or loss and other comprehensive income statement, financial position and cash flow statement for profit organizations, while NPO its income and expenditure account, statement of financial position, statement of cash flow, and statements of functional expenses. Net worth for profit organizations is profit or loss is transferred to a capital account, and for NPO, its surplus or deficit is transferred to accumulated funds. Accounts of non-profit organizations, receipt and payments account. It represents the summary of cash and check transactions in financial year. All the money received is debited while all the money paid is credited. The account is closed and any balance in the account is carried down to become the opening balance for the following financial year. It is similar to the cash and bank account of a profit-oriented organization. This account helps with the preparations of the income and expenditure account. Income and expenditure account, regarded as the income statement of non-profit making organizations to find the surplus or deficit made during a period, prepared using the same principles as those applied in the preparations of the statements of profit and loss of a profit-oriented organization. This account is used to compare the income of the organization with the expenses of running it. If income bigger than the expenses, it equals to excess of income over expenditure, called surplus. If income is less than expenses, it is excess of expenditures over income, called deficit. Accumulated fund. It represents a form of capital account for non-profit organizations. A profit-oriented organization would have capital accounts. However, a non-profit organization replaces the capital account with the accumulated fund. The surplus in the income and expenditure account will be added to the accumulated funds, whereas deficit will be deducted from the accumulated fund.